FM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Kicking things off today, it's Chuck, Mark, and Tucker with you, and we're going to start with a discussion on what we're seeing in corporate America with profits continuing to move in the right direction despite some recent concerns about an economic slowdown. Mark, when we talk about profits and recession, am I right in saying that it would be very unusual to see profits in corporate America or the S&P 500 continue to grow in the event that the United States has a recession?
It's funny you should ask because we didn't rehearse this. After reading this article, I looked at the year-over-year change in earnings leading up to the first month of an NBER, National Bureau of Economic Research recession. They're the official so-called arbiter. There have been 12 recessions since 1940, so we'll just use the post-war period here.
Sure.
And in 3 of those, so a quarter, earnings have grown in the 12 months leading up to the first month of NBER recession, in the NBER recession chronology. So, yeah, I think it's unusual. Now, that's obviously only a small slice of the total recession and earnings experience. It's unusual for earnings to grow into a recession, but it's not unheard of. In the last
What are the
6
three examples?
1973, 74. Now, I'm looking at nominal earnings and nominal. I'm looking at nominal earnings here. So 73, 74 could be explained by inflation.
Sure.
So real earnings could have been contracting.
Yep.
1948, 49, similar situation there.
Yeah.
And 1953, 54, we had a big spike in inflation in 51, and we were coming out of that slump, and the slump induced by the spending reduction following the Korean War caused a recession, a mini recession. Yet earnings went up year over year. So the vast majority of the time, earnings go. I just looked at the 12 months leading up to the first month of recession. There are lots of different ways to slice the data. We got this article this morning. I didn't have time to look at alternatives. So no, Chuck, it's not a perfect indicator. In fact, you get a lot of false positives. When I ran the show me years when earnings went down and GDP did not, I'm talking about something different here.
Yeah.
But there are, and I had to sort by year here because there are many instances of year over year, so you get overlap within years. That's a little technical.
Yeah.
But suffice to say, I did try to think about looking at separate episodes. There are dozens when earnings went down year over year, but we weren't in official recession. Some of them coincided with slowdowns, and in some cases, recessions began not too long thereafter. But earnings, the bottom line from my little analysis here, very poor. You wouldn't put earnings in your economic forecasting model. Year over year now, forgetting about NBER recessions for the moment, there's no correlation between the year-over-year change in earnings and the year-over-year change in nominal, that is, not adjusted for inflation, GDP. Zero correlation.
Another thing just that I came across this week in terms of trying to make sense out of, hey, there's been talk that the data the last couple weeks now is showing, a little bit of a slowdown there. We got both ISM prints that came in weaker than expected. You had job growth that still growing, but slower than expectations. And so, you're trying to make heads and tails of, okay, what is it exactly that we're seeing? Is this something meaningful that's shifting here? And one of the things that I find really interesting, and I talked about this on Monday, but I keep coming back to it, and I'm wondering what your thoughts are, Mark, because it's really interesting, and I don't think we've talked about this yet. Normally what you see is heading into the next quarter of earnings, analysts are lowering their estimates, and then companies end up beating those reduced estimates. That's the typical game that we see played heading into earnings season. So as an example, in Q1, at the beginning of Q1, estimates for Q1 earnings were 5.7% profit growth for the S&P 500. By the end of Q1, analyst estimates were that profit growth was only going to come in at 3.2%. So you saw a significant reduction in projected earnings for the quarter, from 5.7 down to 3.2. With 80% of the S&P 500 reporting, we currently have 5% earnings growth, so pretty close to the initial estimates.
This is year over year.
Yes.
Yep.
What's interesting to me is that if you look at Q2 of this year, the earnings estimates since the start of the quarter have actually risen by 0.7%. Now, that is something that is entirely not consistent with even the message that we're getting from some companies. When we talk about, you had Starbucks who reported last week who said, the U.S. consumer is weak. They're not shopping, they're not buying anymore. And they say that on the same day, and I keep citing this one because I just love it, that Wingstop, granted very different target market, but 1,400 locations, not some tiny little company at this point, reported 21% year-over-year same-store sales growth, which is just insane. It's nuts. And maybe the problem is just that Starbucks has an old and stale product at this point, and that's part of the issue more than anything else. But when we're looking at this, it's really unusual and really rare for analysts to say, yeah, we think that the next quarter's profits are going to be stronger than what we thought a few weeks ago as you're heading into that next quarter.
It sounds weird.
That's unusual.
I don't know how rare. I'll take your word for it. I
don't know how unusual it is.
Yeah, getting data on analyst estimates, which are revised frequently, requires very expensive proprietary licenses, which we don't find it worth it to obtain.
No. But all of this to me is consistent with an economy that probably is slowing down from what it showed in Q4 and the first part of Q1. And that's not necessarily a bad thing so long as the slowing doesn't go too far, because as we've talked about, the growth that we saw at the tail end of last year was probably above the capacity of the United States for the long term.
If you're listening to this, you must be thinking, geez, these guys talk about a lot of economic indicators, and they're always trying to tease out what could be around the bend.
It's because no one knows.
Nobody knows. We sound like we know what we're talking about, but we're experienced enough to admit that nobody really does, because there are too many variables, some of which we don't even have visibility on. If you had to look at just one thing, if I had to pick an indicator, let me put this in the form of a question for either one or both of you guys, if you want to take a shot at it, because we should all be able to answer this question. What would be your go? And I know the answer is I look at a mosaic, but if you had to go to something, what would it be?
For what?
Forecasting near-term economic performance. If there's one indicator when it turned down that would really sway you, or
aggregate payrolls.
Okay, you love that.
I do. It's because
I was going to say the stock market. Better leading because it leads everything.
It leads further.
A lot of false positives, but if you think about the channels through which big increases in market values and big decreases in the value of the stock market. If you think about the number of channels through which you can influence the real economy, it's both it's both a contributor to investment and an indicator of sentiment. It has so many uses, with the caveat that you get a lot of false positives.
And I think given that, if you look at what the market has done over the last month and a half, it's kind of paused. At even 2 months. At the start of March, the S&P 500, March 1st, closed at 5137. It got back, it went higher, it went about 3% higher into the end of March, then fell about 5%, and now has rallied about 4%. It can't really get conclusive traction in either direction. And I think this is also something that happens at economic pivot points, which is, hey, if the market, if market participants can't figure out a convincing story to buy, then you just kind of chop around for a little bit. And this is what we saw in September and October, which eventually, look, it did end up in a 10% dip from August to late October, but it was just this series of like 3 to 5% chops that kind of got you there. And it's because no one really knew what to do. It was just, like we don't have a convincing story either way. The data was worsening as far as where yields were going, and so stocks were selling off because of that. But as soon as you got this story that markets could buy, which was, hey, we've beaten inflation. I'm not saying that we have, but this is the story markets bought. We've beaten inflation. Rates are going to be able to come down. Companies can grow. Things took off for the next 5 months. And right now we're at one of these pivot points, which is, hey, what is the next story? Is it inflation continues to be a problem and the Fed's going to have to do more? Is it there's slowing growth, but maybe it's not a recession? Is it, hey, the slowing growth is going to do enough to stop inflation that we can then grow again without inflation being a problem the rest of the year? And all these are viable possibilities right now. It's just the market doesn't know what to do with it. So it's just kind of chopping for the last 2 months. It's kind of where we are. Let's take a quick break here. When we come back, we'll talk a little bit about Walmart and their upcoming earnings report.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
A 2023 report from LawDepot.com shows that 73% of U.S. adults don't have a documented estate plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. You don't want to be a member of that group. Proper estate planning is a critical element to you being able to pass along your assets to your family and to enjoying your retirement years. If you want to avoid making mistakes that could prevent your family from benefiting from your financial success, then call our office today and ask for a copy of our new guide called Leaving a Financial Legacy. We tackle critical estate planning topics such as long-term care costs, estate taxes, and more, all from a financial standpoint. Call today at 800-393-4001 and get your copy of this free guide, 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Coming up next week, Walmart is going to be reporting earnings, and it is likely to be a pretty closely watched earnings report just because Walmart has so much information and such a good signal about the state of the broad consumption trends in the United States. When we look at Walmart, they were one of the companies a couple of years ago who in the spring of 22 said, hey, our inventories are way too high, and what was going on for the last couple of years during the pandemic isn't really continuing, and we saw some changes, and we've got to start clearing this inventory because customers are just not buying the stuff, and so there's something here. It was them, I still remember it well, it was them along with Restoration Hardware. Talk about two companies that have nothing in common, Walmart and Restoration Hardware, other than they sell things. But both of those kind of said, hey, both the high-end and average consumer are really not in a good spot in terms of continuing to buy stuff, and that was a trend for the last couple of years. So Walmart's going to report earnings next week, and it comes on the back of, we talked about Starbucks, hey, you know, they had a bad quarter, and people are concerned that signals something. McDonald's had kind of an okay quarter, and Amazon, I thought, actually had a pretty good quarter. I'm not sure why they're lumped in here in this piece, but eyes are now turning to Walmart saying, hey, save us, Obi-Wan Kenobi, you're our only hope. It's kind of that story here. And I don't think that should be a story, quite honestly, Mark. And here's why. Over the last 5 years, when we look at, let's look at total return, just because I think that's valuable. Starbucks has a total return of over the last 5 years of 2.8%. That's including dividends. Would you say that that's bad to quite bad for an equity investor?
Relative to the market, it's horrendous, yeah.
Walmart, on the other hand, has a total return of 94.72% over the last 5 years. I would say that that's strong to quite strong. And what I'm getting at here is that for the last 5 years, even let's go look at the last 10 years, just as an example. Actually, the last 5's better, because this is really the post-Howard Schultz period, aside from that brief interlude where he came back. Are there any facts in evidence that Starbucks is effective at managing its business right now to the point where it's accretive to equity investors?
By this measure, share price measure, no, it's not evident.
Not really. It's they've, and it also seems like they have these problems every few years where, oh gee, we've got to go back and kind of reinvent our business, and do we have too many stores? Do we not have enough? Blah blah blah. Whereas Walmart, okay, great, we're selling a bunch of groceries and a bunch of other stuff, and we just kind of keep chugging along. Like that's what Walmart does. And I guess what I'm getting at is, are we reading too much signal into Starbucks earnings, whereas they're more just noise? and not really representative of any broad consumption trends?
That would be my choice of explanation, but I haven't looked into it. So, yeah, you never look at one company, which is subject to, as finance researchers like to say, a lot of idiosyncratic factors. Idiosyncratic is a fancy way of saying isolated or unique to. I don't know why we use that word, but it's stuck. As opposed to systematic risk, which is the risk you take on, or systemic. You can sort of use those two interchangeably, but finance types have landed on systematic. That's the market risk. That's what you take on to earn the returns that stocks have provided over time to fund your retirement. Why would you take on non-systematic or idiosyncratic risk by owning an individual company when you can get what the markets on average as a whole have delivered over long periods of time? I'm making the argument for indexing here using a broad fund, because you cited Walmart's 5-year return. It's right in line with that of the market. So you did no better, actually slightly better, I think, in the market than in Walmart. Either way, it's very, very close, but with less than half the risk if you had invested in a broadly diversified. I'm using the S&P 500 as an example here, but you can choose other indices too. This is always the question for an investor. Do I buy the market? Forgetting about what you think about the short-term prospects for the economy or markets generally, how do I want to tap this generative thing that we call public equity markets? Do I want to buy a bunch of individual companies and hope I choose well, or just buy as broadly diversified an index, a basket as possible through an index fund? Sorry, I know I took that in a slightly different direction than you were getting at, but
the big thing is, I'm not sure that Starbucks is indicative of
too much idiosyncratic risk is what I was trying to say.
It's noise. I'm not sure there's any
Walmart
signal
too, by the
there
way,
at this point.
Is representative as their.
I think there's more signal with Walmart than with Starbucks.
Broader product line. You can make all those arguments, but there's still company-specific, idiosyncratic, since I'm hooked on that term now, and we all know what it means. It just means unique to the entity under observation, under study. There's idiosyncratic risk with any individual company. You can't infer too much from it.
Americans are racking up phantom debt that Wall Street can't track. So this is, oh my goodness, it's going to be something spooky here. So this is getting at the fact that these buy now, pay later platforms, Affirm, Klarna, Afterpay, they don't report the amounts outstanding on their loans to credit agencies. Which is dumb in one respect, because these programs are now being tracked by credit agencies in terms of impacting your credit score. That was a change that was made last year. So if these programs are going to affect your credit score, shouldn't they have to report the amount of debt outstanding to the credit agency as well? Doesn't that just seem like a basic thing? There has to be a cause and effect. Oh, this affected your credit score because you paid off a loan or because you have too much debt outstanding. Not just, hey, it affected your credit score because it did. That's not really a reason. So I don't quite understand how this is not required to be reported to credit agencies in terms of the amount of debt that you have outstanding on these platforms. And not that I think it's a huge problem, because I don't. The dollars there are just not big enough by any measure to get me concerned about the U.S. economy. But it's much more, hey, if I borrow money for basically anything from a financial institution in the United States, it gets reported to a credit agency. Why not this?
So the bigger issue to me here is we hear repeatedly from bosses at big banks that the consumer balance sheet has never been more solid, at least not in their experience. But there's this nagging feeling that that's not the case, that we're all on the precipice of financial disaster. I don't have an explanation. I just think it's a really interesting phenomenon.
Let's take a quick break here. When we come back, we got Wall Street Watch, and then we're talking about pandemic moneymakers turned into post-pandemic losers.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years. And it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, one day after the Dow notched its longest winning streak of 5 since December, markets today are mixed territory, mostly quiet, as first quarter earnings season continues to chug along here. Right now, The Dow is up by 20 points, S&P 500 is down by 4 points, and the NASDAQ is off by 26 points. Russell 2000 is off by almost 0.75% or 14 points. 10-year Treasury yield up by 1 basis point at 4.47%, and crude oil off by about 0.5%, trading right around $78 a barrel. Uber down by 7% after the ride-hailing and food delivery company posted weaker than expected bookings revenue in addition to a surprising net loss for the first quarter. Uber's overall revenue did, however, climb 15% in the quarter compared to a year ago. Chuck and Mark will have more on Uber in the next hour. As for Uber's rival Lyft, that stock up by 7% after the company showed faster than expected growth in the first quarter, as well as $1.28 billion in revenue above forecasts of $1.16 billion. Lyft's bookings also surpassed expectations. Meanwhile, social media company Reddit impressed in its first earnings report since its IPO in March, sending that stock up by 3.5%. The company saw its revenue jump 48% to $243 million in the first quarter and also reported 82.7 million daily active users for the period. Elsewhere, Electronic Arts down by 2% after the video game maker reported disappointing quarterly results, while current quarter guidance also missed estimates as the company didn't release any major video games so far this year. Shopify posted a net loss and said it expects sales growth to slow in the current quarter, sending shares in the e-commerce platform down by 20%. And after today's closing bell, we'll see earnings from ARM Holdings and Airbnb. I'm Tucker Silva, and that's Wall Street Watch.
There's a piece from the Financial Times today, and it is titled Pandemic-Era Winners Suffer $1 trillion Fall in Market Value. Now, I hadn't looked at this chart in a while. I actually keep a chart. It's just 10 stocks, but I literally titled it. You can see, Mark, it's the Pandemic Darling Bleep Show. That's what I titled it.
That's
just
ugly.
Because
that's ugly.
I wanted to see how bad it was. And these are the 10 stocks, and this is how far they are currently from their all-time high. Zoom Video, down 89%. Peloton Interactive, down 97.75%. Wow. Roku, down 87.5%. Robinhood, down 75%. Shopify, down 63%. Twilio down 86.4%. Block down 74.8%. Teladoc down 95.8%. DoorDash down 54.65%. The only one of these that has made a meaningful comeback and now exists as a regular company that can probably be removed from this list is Netflix, which at one point, believe it or not, and this is kind of hard to believe. I know that recently they've been just cranking, but Netflix at one point had fallen 75% from its all-time high in 2022. I think we forget that sometimes, given how good the recent performance has been. But how many investors, lost like 60, 70% and said, I'm throwing in the towel on this. And then it's just absolutely knocked the cover off the ball since then. It's kind of remarkable, but it also is the exception that proves the rule that, hey, I say this a lot. How do you lose 99%? Well, you lose 98% and then you lose another 50. Like that's how it happens. Most of the time when you get down that far, you don't usually come back. It's just really hard to do.
Yeah, and if there's one theme that's pretty constant in markets, any asset class, any market, it's reversals of fortune. You could do reasonably well by betting on yesterday's losers, because markets tend to overreact. They overreacted in this instance. We all did. You can only extrapolate using the experience at hand. And up to that point in the pandemic, we all remember what that was like, how weird it was. It seemed like these platforms, I'll just refer to them all as platforms for something that you could consume in the house. It seemed like the future because there was no end in sight to that to that episode. Bet on you. If you are market timing, and we don't suggest that here, we don't dispense investment advice at all, but I'll give a little and I'll say don't, market time, just stay invested, and don't buy yesterday's winners for the most part. Bet on yesterday's losers. This is something that's been articulated by Warren Buffett and others too. You might call it value or contrarian investing. Be a little contrarian. You're probably better off. That's the lesson that jumps out to me.
Let me talk about that. It's not, identifying the time and place to be contrarian is the important
not
piece.
mindless contrarianism, but yeah.
Because otherwise, generally, if you're just contrarian, you're like, oh, I'm not going to buy stocks.
No.
You could get yourself in a whole pretzel then.
Right. Don't always be a jerk. Right.
But the most important question, and this is, I guess, how you can figure out when it makes sense to be contrarian, in my opinion, the most important question in investing is what I am seeing for this, that, whatever it is it permanent or temporary? That's the whole ballgame. All these companies that are now down, 80, 90%, it's because the investors bidding them up said, oh, this is going to be permanent. This is the shift. And it might have felt permanent at the time, but clearly it wasn't.
Yeah, and you weren't diversified by buying them all either, because they were also tethered to one theme. It's important to know, I guess, what's driving either in an investment thesis sense or in a management long-term plan sense, what's driving the behavior you're seeing.
Let's see. Do we want to cover this piece on how the strong dollar is helping in financing the U.S. deficit?
I sort of like this, not so much because of that angle, but
sure.
I liked it because it's rich with irony. Mnuchin, Steve Mnuchin was Trump's Treasury Secretary, and he might end up in the cabinet again if Trump wins. An experienced private equity investor and a good, steady, solid pair of hands.
He did a fantastic job there, actually.
Yeah, I like him as Treasury Secretary.
And by the way, also has one of the most fascinating bios out of just about anyone out there.
I don't want to get.
I watched a Lego movie the other day with the kids, and all of a sudden, executive producer Stephen Mnuchin.
So here's the thing about Steve Mnuchin is all of a sudden, he was big on Wall Street for 20 years, I think. Like he started at Goldman back in the late 80s, early 90s, I think, and basically hung out on Wall Street until 2010 or something like that. And then all of a sudden decided, hey, you know what? I'm going to get into film production. And these are the movies that he produced it was a 4-year run of movies that he produced. The Lego Movie, Edge of Tomorrow, American Sniper, Mad Max Fury Road, Entourage, Black Mass. Hang on, there's more stuff in here. Suicide Squad, The Accountant, Lego Batman Movie, Wonder Woman. Again, it's just came out of nowhere and just started throwing hits at the wall, basically, in the film production arena, and obviously then went and became Treasury Secretary. But just what a wild thing, no one does that.
Yeah, he also produced Blowing Up the Deficit, the sequel from 2017 to 2021. It was a blockbuster.
Yes.
So as much as I like Mnuchin, and maybe he couldn't say anything because you don't want to cross Trump. He's now lamenting big debt and big deficits and the accumulated debt, nearly $30 trillion. We mostly all know this the story there. We're looking over the edge of a debt precipice. He was responsible for 40% of that while he was Treasury Secretary. Speak up or resign, Steve, if you feel that. And he apparently feels strongly about it because he spoke out against it in this piece to his credit. And I don't know if that disqualifies him from becoming Treasury Secretary again or not. But that's a little bit ironic coming from him. And also the strong dollar policy. Oh, now a former Trump official is for a stronger U.S. dollar?
Right.
Come on.
Let's take a quick break here. When we come back, let's talk a little bit about what's going on in Massachusetts, trying to encourage young workers to stay in the state.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, so we got a piece here in the Boston Globe. It's titled, Hoping to Slow Loss of Young Workers, Healey Pushes for a Jobs Bill. And what it is talking about is, hey, there's been some data over the last couple of years showing that kind of prime-age workers are heading out of Massachusetts at a rate that is making state politicians a little bit nervous. Like, hey, like the demographics aren't looking great. Specifically, that young adult demographic, age 26 to 34, you've got people leaving at a faster rate than the state would like to see. So here is what the Healey administration is proposing. It's a $3.5 billion proposal. That's over a 10-year period of time. And the biggest chunk of it is probably a slam dunk to happen anyways, because I do think it has been one of the greatest growth initiatives of pretty much anywhere in the last 25 years at the state level, and that is the life sciences tax credits and things like that. If there's one thing that you can say about Massachusetts, it is ground zero for biotech. It's basically what Silicon Valley used to be for conventional technology back in the 80s and 90s. And so this would reauthorize the Life Sciences Initiative at $1 billion for the next decade, which is probably a slam dunk. And then there's some other stuff in here, an applied AI hub, a Massachusetts tech hub, Massachusetts infrastructure rebuilding, a rural development fund, a Seaport Economic Council, $99 million for manufacturing, yada, yada, yada. This is all well and good, and maybe you want to do this, maybe you don't. I think the life sciences thing is the only thing that I really know about because we've already seen it, so okay, great. If you talk to people age 26 to 34, which is the demographic that they're targeting here, the issue in Massachusetts is not that those people don't have jobs. It's not even that they don't have good paying jobs. A lot of them do. The issue is that housing's too expensive for them. That's the problem.
Apparently, their jobs don't pay enough, and I don't understand why normal economic forces aren't working here to correct this. If there is I'll use the word shortage, I'm using it non-technically. If there is a shortage or an impending shortage in this cohort, why aren't companies whose interest it would be in to retain those workers paying them more? Why do we need the Healy administration or any government arm to come in with all these little initiatives, these little tweakings?
I don't think that's. Yeah, I don't think
maybe
it's worth
I'm
doing.
not.
No,
I don't mean to. Maybe some of these things have been wildly successful. By the way, I haven't seen the data on them, and I'm sure people have studied the effectiveness of these little micro interventions, and some of them might be wildly successful. So I don't mean to dismiss them out of hand, but you do have to ask, where's the market failure here? To use a term that economists like to throw around, which just means there's no incentive for businesses to coordinate to do this privately. Why do we need the government to step in?
Well,
that's just not clear to me. There may be a good answer.
Here's what I will say at the state level is the reason that Massachusetts, that businesses I don't think are stepping in is because I don't think businesses really care where their talent is.
Okay.
You know, if you're a large multinational firm, you can hire more cheaply in just about anywhere than Massachusetts.
So why is it in our interest as citizens to tip the scales a bit in favor of keeping them here when we already have a housing shortage? Does that not, and again, using that term non-technically, it's a hysterical term that politicians and journalists like to use. I'm not sure I subscribe to it. But anyway, if we already have a so-called housing shortage, why would you want to encourage, wouldn't we as citizens now, I'm not talking about people with other interests, wouldn't we want to encourage migration out? Isn't the problem too many people? I know that sounds a bit bird-brained, the way I'm phrasing it, but don't we have too many people if we have a housing shortage, or no?
Well,
go ahead, tell me I'm not reasoning correctly.
Here's where I get to is basically any current society is not set up in any way to be able to deal with a shrinking population from an economic perspective. It's not like you look at what happens when population starts shrinking and you get into really bad situations where a combination of, okay, great, we still have programs X, Y, and Z that need to operate. Mass transit, just as an example. We've got roads we've got to repair. We've got, all these costs associated. How do we manage that with a declining population outside of...
Why, do we have budget problems in this state? We've got 2.9% on it. Oh, okay, well, not right now, though, right?
We do have budget problems right now.
Okay.
Yeah, tax revenue's coming in light, and expenses are higher than expected.
Thank you. No, I stand corrected, but with 2.9% unemployment, if we can't, which we have, which is among the nation's lowest
and this
rates.
is the problem, is that there is a spending problem in terms of how do you make the numbers add up. And I'm not arguing that Massachusetts... I feel like I'm being turned into someone who's arguing that, we need to spend all of this money. And I'm not, but I'm saying that there is a problem here and the numbers don't add up. And declining populations exacerbate financial problems at the state level where you can't print your
it just
own
seems
currency.
Odd to me that someone would posit that the solution to the housing shortage is keeping more people here.
No, my solution is, look, and again, I do believe that we don't have enough housing here because there clearly are people who want to live in Massachusetts that can't because of the cost. Like we see when those people leave, it's like, okay, they're telling us what's going on. The answer is to allow more free freer construction so that you can build more homes the way that you want to, where you want to build them. And we don't do that.
So these proposals will not help.
No.
These proposals will do the opposite by keeping people here.
No, and
move
look,
demand to the right and do nothing for supply.
I do believe, look, that like the Massachusetts Life Sciences Initiative, which started 25, I think it was like 99 when it was first signed into law. I think it's been one of the greatest economic successes for the state in the last 100 years. I mean, it's been tremendous for it, especially when you look at the context of the surrounding states and how some of their economies have struggled in recent years. Talk about the economies of Rhode Island and Connecticut and Maine in particular. New Hampshire and Vermont, I think, have been insulated for different reasons, but a number of those have struggled, and it's just something that when I look at it, the cost of housing continues to be something that young people are saying is a problem, and nothing here solves that problem.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Boeing forced to scrub their first crewed Starliner launch to the International Space Station. Look, everyone's going to make fun of Boeing on this because, hey, it's Boeing and they've gone through, a whole bunch of recent failures. I'll actually make the point that, look, if you're scrubbing your launch because you are detecting a potential failure, that's actually a
good
huge
risk management.
Success. And so I'll say that this is actually good that they had this launch scrubbed. And by the way, you look at basically any company that launches rockets, whether it's SpaceX, NASA is a publicly funded institution, there are rocket launch scrubs regularly because of potential
it just
problems.
Sounds bad. The verb scrub. I think we need a euphemism.
I think scrub is the euphemism.
Oh, it is. It's an acronym, I think, or something.
Is it?
I don't know. No, I don't know. I don't know what I'm talking about.
It's a euphonym.
We need a. Jeez.
I don't know. We'll come up with something during the break. Let's take a break here. Hour 2 of the Financial Exchange. Not scrubbed, and coming up in just a bit.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from LawDepot.com. 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here, is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you, and markets not really doing much of anything today. It's, you're kind of poking it with a stick saying, hey, do something. And the Dow is up 62 points, less than 0.25%. The S&P is down less than 1 point, which is 0.01%. And the NASDAQ is off 0.1%, about 16 points, so just not much of anything going on there. 10-year U.S. Treasury is up 2 basis points to 4.48%. We've got oil up 15 cents a barrel to 78.53 on West Texas Intermediate. And we've got gold up $1 an ounce to $23.25 and 20 cents. And quite honestly, this is because there's no meaningful news happening today. So if you're listening to us...
Quiet week.
Not just like this is one of the quietest... When the biggest thing happening is Airbnb reporting earnings.
Yeah, after the bell today, yeah.
We got that after the bell today. And we got a little bit of mortgage data. There's 3 Fed speakers today because,
they have to
man,
speak.
we really need to hear more from the Fed.
Yeah, God forbid those guys don't just read a book. Take a. I'm not suggesting they're not literate. They are.
No, but you're just saying
take a break.
Well, there's a reason.
Take out the Chase Lounge.
Listen, my grandfather always said, and he's not the only one who said this. He said, "There's a reason why God gave you 2 ears and 1 mouth. You know, it's because you should listen twice as much as you talk, and that's why I'm on this show talking right now. It's because I didn't listen." Let's talk a little bit about Social Security. When it comes to Social Security, the latest information is that the Social Security Trust Fund is going to be depleted in 2033, and at which point you will see an immediate 20% plus reduction in Social Security benefits paid out based on how the system is set up. So congratulations, Mark. Good luck.
You're welcome.
Now, a couple things that I have to say about this. The first, and I'm curious to get your thought because I haven't actually talked to you about this, Mark. When the solution eventually comes, because we're not just going to let a bunch of 65-plus-year-old people see a 20% drop in their primary source of income.
Thank you.
When the eventual solution comes, what do you think the most likely path is to fixing it? Because I'm not out here to say, like, oh, this is going to happen, because they're going to fix it. And the reason why this is going to end up being fixed probably in 2032 is because the most heavily voting demographic is 65 plus. And so politicians are not going to screw them over just to have themselves voted out of office. Rather, they're going to screw younger generations over. It's just the question of how. And I'm curious what your thoughts are on how they end up fixing this.
I have no idea. We know we need more revenue to keep benefits constant. I assume that people in my generation, Gen X, born between 65, I think, in 1980, are going to have to work a little bit longer, assuming they make those changes soon, because it's very difficult to take benefits away once they've commenced.
Exactly.
So they're going to have to start that today, and my generation is going to have to step up. As I said to Mike Armstrong yesterday, Gen X needs to step up and take one for the team. I've written baby boomers off. I know a lot of you are in that cohort, and I apologize. But most of you don't care about Social Security because yours is commenced, and you very understandably don't want to see that benefit reduced. You paid in, you waited, you planned. It would be unfair to cut benefits for people who have planned. Since we're just talking off the cuff here, I have no analytics to share.
Sure.
But it's not unfair to cut benefits for those who have not already begun benefits, like my generation, that'll be eligible starting in, for the oldest part of Gen X in just a few years. For those in the middle, in about 10, and then those on the tail end a little later. We're going to have to work longer and probably make do with lower benefits. That's the only way to avoid severe tax hikes on younger people. That would be equally unfair.
I would be surprised if Gen X even gets hit particularly hard on this.
I think because we're so close to commencement that we'll become more vocal. But in terms of numbers, we don't have the voting. If the baby boomers and the younger cohorts gang up on Gen X, we're not going to have a choice. So by that I mean both sort of veto through voting changes today or changes that might affect younger cohorts.
Doesn't part of this also depend on
what really poorly said, sorry.
Doesn't part of this also depend on what the composition of Congress is in 2032 in terms of generational?
Lots of factors, Chuck. I'm not even
I'm not even talking like partisan wise. I'm talking
I know ideologically.
Who's actually in there from an age perspective? I'll give you an example. This is one that I actually just heard about a couple weeks ago. Did you know that in New Hampshire, you used to have to, I don't know if it was when you were over 65 or over 70, used to have to take a driving test every 5 years in order to renew your driver's license. You did?
No, I did not know that. No.
You did?
No, because I've never been a resident. Who cares?
It was...
No offense to
that was
great listeners in
repealed a number of years ago, largely because of an older demographic in the New Hampshire State Senate that said, yes, we don't want to take our driving tests every we don't want to do this. I bring this up because it's relevant to Social Security in terms of, hey, what buttons and what levers do you pull and press is going to be dependent on the demographics when the fix actually happens. And this is an area where the counterpoint to what I said earlier about how Gen X might not be affected, the millennial generation typically gets screwed by baby boomers. It's just it's what we've kind of come to expect. Gen X kind of gets screwed by everyone because the classic Gen X gripe is everyone forgets you. People just, no one talks about you. It's either the boomers or the millennials is who everyone talks about. No one talks about Gen X.
I was having a good day, but
so the hypothetical really funny situation is, hey, we're going to fix Social Security by taking it away from Gen X.
Yeah, they won't complain.
It's they'll just make
snarky jokes.
It won't actually happen, but that's the Gen X joke is you'll just take it away from us completely, and we'll have to live with it.
We will object with sarcasm.
Yes.
And muttering. That's what we do. We're the sort of Seinfeld slackers.
Whereas the millennials will just whine. That's what we do.
You're also bigger. Your cohort is 80 million people, roughly the size of...
I appreciate that. We did a lot of work to get there,
But you're like the size, and baby boomers are getting smaller.
We're bigger now than the baby boomer generation.
They're dying off, I'm sorry to say. Well, it'd be unnatural for them to live forever, so I guess I'm not sorry to say that.
We're all heading to the same place.
That'd be a frightening prospect. Right. So you guys are going to determine the future of all of these entitlement programs. We know they're on an unsustainable path, and I suspect given our history as a country of not confronting a crisis until it's at our doorstep, because it's hard as democracies to do something that's farsighted, that imposes pain today.
Totally.
Like, look at global warming.
So what Winston Churchill said about us: you can always count on Americans to do what's right after exhausting every other option first.
Yeah. But that's the way democracies work, and arguably you arrive at better solutions than some idiot autocrat who becomes more and more insane and detached every day. There's good. The give and take of a democracy is not a bad thing. It ensures that a stupid idea doesn't get very far most of the time. So if history's any indication, whether you look at the Civil War, World War II, I'm using military examples here that you know better than I do, we don't do something until a crisis is at our doorstep generally. Civil War is a little unfair because we did try to resolve slavery with a couple compromises, or a few compromises that didn't end up working out. So that's a little unfair. But you know what I mean. We're not going to do anything until benefits. This trust fund, I guess, pays for the difference between what comes in taxes and what goes out in benefits. I was reminded of that by the article that Mike Armstrong and I reviewed yesterday. So when the trust fund dries up, it's not like there's no money to pay benefits. You just have to raise taxes to pay benefits or cut benefits. It becomes simpler. Calculation becomes simpler at that point.
Here's what my solution is, and the tool that I'm using to do this math is not my own. It's from the Committee for a Responsible Federal Budget.
Yeah.
They've got a tool out there. It's called the Reformer. Any one of you can go and pull it up online. But I actually have managed to cover 104% of the shortfall. And here's what I would do. At this point, anyone new who is going to be collecting Social Security, their full retirement age is going to be age 67. That's where it is based on how things have moved up. So all I would do, index age to longevity after it hits age 67. So if lifespans go up, great, you're going to see the full retirement age gradually go up. If they don't, then it won't. That's going to cover 19% of the shortfall just by indexing full retirement age to longevity. Not even adjusting it right now, just if it changes in the future. Second part, and the biggest thing, apply the Social Security tax to all wages above $400,000. So you're not impacting, anyone who's making less than $400,000 in any way, shape, or form, and that's going to cover 66% of the shortfall, is just by covering those higher wages.
Be a big tax hike.
Yep, but not on 97% of Americans. That's kind of how I look at it. And
look, if somebody's got to bite the bullet on this, I
the third
guess
piece,
their best position.
The third piece, and this would probably be the least popular part for most Americans, I would change the cost of living adjustment to the chain CPI. So it's not going to be as robust of a cost of living adjustment going forward. And that's 18% of the gap. Those three changes cover 104% of it without impacting 97% of Americans from a tax perspective. And the only meaningful shift is, hey, if lifespans get longer, full retirement age goes up, and the cost of living adjustment will not be as high.
It's self-evident that it's not as easy as that calculator suggests because nothing's been done.
I don't know. Sometimes Congress has trouble doing really easy things.
True, but several Congresses, more competent than the current one arguably, have failed to act on this. A generation's worth, in fact.
I think it's just because no one wants to be blamed for it. It's not hard to fix Social Security. Medicare, it's hard to fix. So, Medicare is kind of screwed, quite honestly.
It's similar actuarial issues there, time value money issues. So I guess if you're listening to this, what is the upshot of all this speculation? Save more. You can't. I know some planners like to say, hey, you save too much. You'll probably die with a lot of money.
You can always give it away later if you have too much.
Yeah, I'd rather have too much of anything than not. When you cut, you overdo it. So you don't have a board that's too short. I think the same thing probably applies to savings. That was a terrible carpentry analogy, but you know what I mean.
No, it's fine. You did great.
Oh, thanks, man.
Let's take a quick break here. When we come back, we'll do a little bit of trivia.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, how many of you have gone to a McDonald's recently only to be astounded by the prices of meals on the menu? Well, today, a Big Mac at some of the locations across the U.S. can cost nearly $20, a Big Mac combo meal at least. The Big Mac was introduced at McDonald's in Pennsylvania in 1967 and has become the second best-selling menu item for the fast food chain. Trivia question today: how much money did a Big Mac cost when it was introduced back in 1967? Once again, how much money did a Big Mac cost when it was introduced back in 1967? Be the sixth person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385. And the sixth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
According to data from the Mortgage Bankers Association, the contract rate on 30-year fixed-rate mortgages fell from 7.29% to 7.18% last week. It's the first decline in weekly mortgage rates since late March. And when I look at the state of U.S. housing, I think one of the big themes in the next decade, in my opinion, is going to be, I really don't need to say in my opinion.
That's why I giggled.
Yeah, it's obviously
Cowardly
my opinion.
little giggle.
In Mark's opinion, I think one of the key themes, and this is going to be so different from what we're used to that I think it's going to throw a lot of us for a loop, is the fact that I think the economy is going to be so rate sensitive whenever interest rates move down, in that when we look at the amount of equity that's tied up in housing right now, it's so much higher, both nominally and percentage-wise, compared to what it's been over the last 20 years, in that households are way less levered to home prices than they've been in a generation. You just haven't seen this level of home equity in 25 years on a percentage basis. And what I think it means that's really interesting to me is that if you ever start to see meaningful moves to the downside on mortgage rates, I think there is just a tsunami of homeowners who are sitting there ready to tap their home equity and throw a ton of economic activity into the economy on a very short-term rapid basis that provides a ton of support to the economy and may prevent any kind of deep earth-shattering recession over that time.
I don't know of any historical precedent for that. I see your point that it could work that way, and this is obvious, but it depends on why rates are coming down. If they're coming down because the economy is contracting, then they will not jeopardize their home by tapping it in ATM-like
I don't know
fashion.
about that.
So, okay.
The reason why I say I don't know about that is because of two things. The first is, when given access to debt, Americans just love to take it. It's one thing that we've proven time and time again. We always talk about how, we want to be frugal and this and that, but in the aggregate, we love borrowing, don't we? We do.
Yeah, we use it as we like spending, and that's the obvious tool. Yeah, I know what you're saying.
So, I come back to that first and foremost. The second piece is, and this is kind of dangerous, I guess, but there's this idea that's always out there of, is there, pent-up demand because of, a lack of spending? And I think on, the home equity side of things, it's absolutely true. How many people, are sitting there saying, gee, I'd love to go and redo a bathroom, but I'm not going to do it when home equity lines of credit are being quoted at 8%. Gee, I'd love to do, I'd love to put in a pool, but I'm not going to do it when home equity lines of credit are at 8%. Those come down to, 6.5%. Hey, you know what? We can do this. And keep in mind, most people don't realize that on most HELOCs, the rate floats, so it's going to end up back at 8% if rates go back up anyways, but that quoted rate is what people pay attention to. There's a lot of this, in my opinion, that is lingering out there. And so I think one of the underappreciated stories for the next decade could be that there's a ton of equity in Americans' homes, and they're just getting ready to tap it because they haven't for the last several years because of where rates have been. Yeah.
Again, it's obvious to point this out, but that equity could evaporate if rates come down because of economic contraction, because of recession.
It could potentially, but I think...
Yeah, all else equal would be a good thing. I'm not disputing the premise, yeah.
Taking a look at markets as we head towards the bottom of the hour, the Dow remains in positive territory, now up 94 points, about 0.25%. S&P 500 down 2 points, and NASDAQ now down about 0.25%, off 34 points. So tech lagging a little bit today, and that dragging the NASDAQ with it. Also, we've got bonds, the 10-year Treasury at 4.48%. I'm very interested to see where this moves over the next week. We've got CPI and PPI both coming out next week. They're always the second full week in the month. It was a little bit confusing just because of when May started. I was kind of expecting, normally they're the week after the jobs report, and there's a 1 week gap between them, which is why this week is just so boring. But next week, curious to see if we get any resolution on the next direction of rates. That's going to be interesting to see. So Tuesday we got PPI and Wednesday CPI, the order reversed from how they normally are also.
Served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. All of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
How much money did a Big Mac cost when it was introduced back in 1967? It was only 45 cents. The Big Mac was introduced in Pennsylvania in 1967. The Big Mac was an immediate success, and only 1 year later, it was debuted at every McDonald's location across the country. Paul from Wedo, Connecticut is taking home the Financial Exchange Show t-shirt, and Paul's also registered to win a $100 gift card to Applebee's, which will give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only.
Uber swings to loss despite rising revenue. That's never good. You don't want to have your revenue go up, but your profits go down.
I bet it happens a lot, but...
No, they did just say this was largely, I'm sure it does, largely because of some legal settlements and investments that they made.
One-offs.
So
I'm not excusing it away. I'm just making excuses like a CFO would. Sorry, go ahead.
No, they are one-offs. And I think what you can say about Uber is when you look at them and try to make sense out of, hey, where do they go from here? The first thing that was remarkable to me is this is a company with a market cap of $133 billion. I didn't realize the market cap was that big these days. I'm kind of sitting there going, gosh, I missed the boat on that. And here's the thing. They are profitable still for the last 12 months. You take a look at net income and it's running at, nearly $2 billion. So there's a good business there. Free cash flow is $3.36 billion. So even, adjusting for accounting stuff, like they're free cash flow positive, like, okay, there's something there. The question with a company like this is, hey, you're trading 75 times earnings and 29 times forward earnings. And if your profits are not going to consistently go up, well, then what's the deal with that valuation? And that's going to be the question here. So if their profits are going to get back to growing, 40, 50, 60% a year, okay, you've got something. But there's not a whole, long track record of that kind of improvement, especially, since they've been positive. Remember, this is a company that basically lost money every quarter for the first 6 years that it was publicly traded. And so if this business is barely profitable, which, again, I know that I said they had, $2 billion in profit, but their margins are 2.98% for the last 12 months. If you're barely profitable in a discretionary business with unemployment running under 4%, how do you get to profitability when the inevitable slowdown hits? I don't know.
I don't have an answer to that.
I don't know. But that's the question that they're going to have to answer at some point is, can you make a profit in this business when things are not as hot as they are right now.
Yeah.
I don't know.
What's the plan?
So you've got that. Also, Uber and Instacart, they just formed an alliance.
You must have a pun. I was waiting for. I'm sorry, I didn't mean to put you on the spot, but this is ripe for a Zodda pun.
Well, I was gonna say, like, this goes down, in terms of some of the great alliances in history. The U.S. and the French teaming up against the British back in 1776. I mean, like, there's some big ones that you could potentially put out there, but
I never thought of it that way.
Well, I don't think it's actually that important because, let's be honest, getting takeout delivered to your home is.
I never get it delivered ever.
Well,
Ever.
I don't like the way this is phrased, actually, just to begin with. It says you can now get restaurant takeout delivered through Instacart. When you get a pizza delivered directly from the pizza place, do you say you're doing takeout?
No, delivery.
You're doing delivery.
Yeah.
It's not delivered takeout, it's delivery. It's redundant.
Yeah,
it's
that's
from
weird.
the redundant Department of Redundancy. You don't get takeout delivered. It's just delivery. It's like an ATM machine. No, it's just an ATM.
Tucker, what do you have? What's your beef with? No pun. With takeout.
The fees.
Delivered.
The fees.
Okay.
It's not even the fees.
I don't use it myself. I'm
it's
just wondering.
Like, I'll just go down the street and get it.
Oh,
It's
okay.
as simple as that.
So
it's a laziness thing. Like, I'm trying to fight the laziness. That's all. It's just a me thing.
So, in any case, Tucker, I'm getting some feedback there.
Yeah,
We good?
I don't know what happened there.
Okay,
Hold on.
that's
Give me a second.
In any case, DoorDash is the 800-pound gorilla, I guess, in the food delivery business. And Instacart and Uber Eats teaming up to allow Instacart customers to order from all these different restaurants that are now on their app that will be delivered through Uber Eats. So it's
Okay, I think I'm
basically
following
integrating their platform so that you have access to Uber Eats' restaurants through the Instacart platform.
Okay, I'm with you.
That's what it seems like.
It's not blowing anybody's skirt up here, though, it sounds like. Tucker's thoroughly unimpressed.
I don't know if this is enough to move the needle. I kind of feel like once you're locked into one of these ecosystems, you just order all from that one. It's kind of like, hey, if you have an Amazon account, you don't really go to Walmart and shop around on Walmart's website because your default is Amazon. Vice versa too. If you're used to buying all your stuff on Walmart, you don't really go price shop on Amazon in a lot of cases.
For your default cart, for some items you might. For others, you'll be less discriminating if it's just... so it depends on, I guess, I'm not going to bicker on this subject. But yeah, for the most part, no, people probably don't. Normal people. I'm not putting myself in that category.
I think you just kind of get focused on that. I mean, look,
it's easy. You're busy.
I'm the one. I do all of my grocery shopping at BJ's now because it's cheaper. So it's,
Do they deliver, or do they have a model?
They do have one that you can do. I don't use it. It's like $100 a year for unlimited delivery of groceries if you want it.
Oh, that's excellent.
So you could do it, but quite honestly, I take my daughter and we run around the store and everything, and we make it a whole party. So it's fun. And
what do you go, Saturday morning or something like
Sunday
that?
Morning.
Sunday
Yeah.
morning.
Sunday morning is so we eat breakfast on Sunday morning, and then 9 a.m. we're off to BJ's and we do the grocery shopping.
Wouldn't it be
for
a
the week.
zoo at that time though? Like,
It's not.
Really? Oh,
It's
okay.
not.
It's probably Saturdays more.
I've
busy.
heard that Costco's are always packed.
Right.
But the beaches that I go to is not. I've never been in a case where it's like jammed and I can't get through there. It's just not. I've never even, quite honestly, I've never even had to wait in line for checkout.
Really? Oh, I remember going back when I was in college, and I would have to sit there for like 15 minutes for
Granted,
checkout.
I do the self checkout because we get 20 things for the week because you get 1 8-pound box of grapes and you're kind of good. But I mean that covers at least a meal these days.
You do the you know who I am, right? And they say, yeah, Bill Burr. No, it's.
I'm not tall enough to be Bill Burr.
Oh, is he tall?
I think he's like in his 6s, right?
I don't get the reference.
You don't really look
You
like
think he
him. I was
looks
trying
like
to think
Bill
of someone
Burr?
who was similarly shaped, but a well-known Massachusetts personality.
You know who I used to get actually back in the day was Dustin Pedroia.
Oh, I could see that. Yeah,
I used to get that occasionally.
I could see that.
We're both short, bald guys who happen to be ridiculously athletic. So
I could see that. Yeah.
Got a little bit of the long nose, and we do what we do. Let's take a quick break here. When we come back, we're going to be joined by Corey Adams from Robert Half. We're talking about current trends in hiring in terms of education versus skills. What are employers prioritizing? We'll talk with him after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
As promised, we're now joined by Corey Adams from Robert Half, here to talk a little bit about current trends in what hiring managers are looking for. Corey, how are you doing today?
Good, Chuck. How are you?
Doing well. Can you talk a little bit about the results of your latest survey that you put out here?
Sure. So we surveyed more than 2,500 workers, and 79% said that they believe that their demonstrated skills and work experience are more valuable than their education and credentials through the eyes of an employer. Additionally, on a separate survey, over 2,000 hiring managers, this revealed that when considering applicants with the necessary skills, managers are most willing to bend on years of experience requirements over education and certification. So you kind of have two different things happening here, right? So finding skilled talent is really challenging. It's been challenging for years. We've been talking about it for years. And so companies probably should start thinking about potentially updating their hiring strategies to place greater weight on skills and experience versus education and credentials. And in doing so, this could give companies a better chance at landing talent for specific top key roles. And then just the other side, real quick, workers with the requisite skills who may lack formal education in their field shouldn't be discouraged from applying for roles where they otherwise might meet the qualifications.
How do employers go about figuring out if someone that they're trying to hire has the skills that they want? I mean, it's one thing to say, hey, they should prioritize this. What does that look like in a practical sense?
Sure. Well, so some companies probably haven't instituted this yet, and maybe because of just some of the demand in hiring, they might be considering making this move. So first off, if you're thinking about implementing hiring around skills-based hiring specifically, I would say a couple of things you should do. Number one, you're going to want to update your job description, making sure the focus is on the responsibility and requisite skills, and obviously not in education. And how you do that is you describe the specific tasks that you want the individual hired into this role and what they're responsible for. And you also want to note the key performance indicators that will be used to measure success. The other thing I would recommend is you may want to consider adding a skills assessment to your hiring process. And so this could be something like a writing sample or a coding test. It could potentially even include a personality evaluation or an exercise designed to evaluate cognitive abilities. And so this is going to help you not only get a better idea of how the candidate's actual skills match up with the description on their resume, but you never know. This might actually help you identify an employee with significant growth potential.
You mentioned that right now it's still challenging for a lot of employers to hire the people that they want to hire. What about training existing employees in new skills and with new capabilities? What kind of thoughts do you have on that?
Sure. This is an important one because we're hearing a lot of this lately, and this revolves of both upskilling and what we call reskilling. And so before I even jump into that, there's two pieces of data that I think are really important to share around this. So according to Robert Half research, 46% of hiring managers say that they're in the market for new talent because their current teams do not possess the requisite skills needed to fill a job or to execute on a project. Additionally, 51% of managers surveyed who are looking to hire are having difficulty finding skilled talent on the market. So you have existing managers who can't find people that they want to hire with the skills needed. You have current managers who don't have the skills needed on their infrastructure. And so simply stated, managers can help solve for the skills gap by focusing on upskilling and trainings within their existing staff. And when necessary, reskilling can also help your current employees develop their career path. And it actually gives you an advantage. So bottom line, what we sort of share is that both upskilling and reskilling are effective strategies that can really help you boost with not just retention, but just hiring long-term in general.
What about for workers? What advice do you have on that side of the ledger in terms of what could help them in a skills-based hiring push?
So for this, we like to refer to the DASH technique. So first is do your research. 2 out of every 3 hiring managers have stated that the candidates and the applicants who take the time to research the company, understand the mission, the value, go as far as looking at who you're interviewing with. That is going to separate you apart from the other applicants. From there, you want to ask good questions. So curiosity demonstrates genuine interest. And so it's a really good idea to have some really well thought out, intelligent questions that you can ask through each step of the interview process, whether it's one round or it's multiple rounds. Next would be showcase your soft skills. Employers are assessing candidates' interpersonal and communication skills because they want to make sure that you have the ability to collaborate and interact with all levels within an organization. And then finally, and this is a big one, but you want to have responses for the hard-hitting questions. In the interview process, you're going to be asked direct questions. And so you need to be comfortable in figuring out how to answer those. There's one in particular, the most important one that anyone in the workforce knows it's going to happen. This question is coming, and is what are your salary expectations or requirements? And so for this is something that's going to require some practice, whether you role play or you do mock interviews with a friend, a family member, a mentor. My biggest thing I would say is whether you're newly in the workforce or you're about to enter into the workforce, the first time that you answer that question should not be in the first interview that you have. So it's something that definitely takes practice and getting comfortable with.
Very good. Corey, thanks so much for joining us today. We appreciate it.
Thank you, Chuck. Have a good week.
That is Corey Adams from Robert Half talking about education versus skills-based hiring. Mark, what do you got for me for Stack Roulette? Anything we haven't covered that you want to get to?
There's a lot of chatter lately about the 401k and other individual retirement accounts. I'm not using that as in the sense of an IRA, just as in the sense of individually owned and managed, somehow being a mistake because they've left some people behind. And there's an article in the New York Times to this effect today. There's a great book. I don't necessarily agree with its conclusions for what it's worth, but by a famous labor economist that makes that argument lately. So I went back and looked at the returns on stocks from 1981, the first year that somebody figured out, a guy named Ted Bennett figured out there was a loophole in the Internal Revenue Code to create a 401k. Since that time, stocks have returned 12% on average a year, some harrowing years.
Is that the S&P 500? Or is...
Thank you. When I say stocks, I mean the S&P. Technically the Morningstar Large Cap Index, because that's the series I've got the best data for.
Sure.
So while the 401k is certainly not a panacea and IRAs are certainly not a magic bullet, for those who saved in disciplined fashion, starting at virtually any time, even at market peaks over the last few generations, if you were able to save, that is a big if. We don't all have that privilege and ability. They've been an enormous success. Has their reach been broad enough? No. Is that reason to end the experiment in self-directed retirement savings? My personal 2 cents is no, not if you can commit to a plan and stick with it. It's been wildly successful for those of us who had access to them.
What's been the argument against?
They don't provide the same retirement income security as pensions did. Duh. Yeah, no kidding. Pensions were a luxury that companies couldn't afford.
Right.
It sent some into bankruptcy, as anyone who lived through the 1980s and is familiar with the General Motors and other big 3 stories knows. Yeah. They simply weren't affordable. You could blame shareholders for not being willing to part with some of those profits, but they were doomed, as Ted Bennett, the so-called father of the 401k, points out in this Times article. Pensions were going ways too strong.
It was just a matter of whether or not it was going to be another
was
tax
going to be replaced by
advantage
something.
Yeah.
So plenty of flaws in the 401k and plenty of flaws in the way the industry implements it. Some funds are too expensive. Some record keepers charge fees that are too high right on down the line in terms of criticisms. Nobody can disagree with many of those. But by and large, it's been a wonderful wealth accumulation vehicle for Americans who've been privileged enough to participate.
We are done for the day. Back at it tomorrow on the Financial Exchange. Enjoy the rest of your Wednesday, and we will see you tomorrow.